As we saw in the buy stop and sell stop video, traders place pending orders on their assets. When the market price reaches the pending order level, the order is automatically executed. Apart from buy stop and sell stop, the other two popular pending orders are buy limit and sell limit. A buy limit is a predefined price set by a trader when they wish to buy an asset at a lower price in the future. A buy limit is a predefined price set by a trader when they wish to buy an asset at a lower price in the future. The key difference is that a sell limit by a sell limit is always placed above the current market price. A buy limit is always placed below the current market price because the trader expects the price to fall first and then rise. Learn more trading concepts by watching our next lesson. Subscribe and turn on notifications so you never miss our latest educational videos.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.